This applies everywhere. Oracle jumping 40% in a day. All the headlines. Best day since 1999. Best day since 1999. And that sounds awesome. But what happened after 1999?
Hello and welcome to Being Exponential with Luke Lango, where we'll discuss the economy, markets, technology, lifestyle, all from an exponential perspective. I'm your host, Brooke. It is September 10th, and let's dive right in. Okay, Luke, clearly you're in a car, so that means this episode is a little different. We know you're coming from the All In Summit. I'd love for you to give us a recap of what happened.
Yeah. First things first, Brooke, I am in a car, but not just any car, because when in Phoenix, Arizona, you don't take Ubers, you take Waymos. So for those of us that listen to this podcast that have not seen a
Right.
Waymo before, here you go. Here it is. Just picked me up from Phoenix Sky Harbor International Airport. Gonna take me to my house. Got about a 30-minute drive. So let's get this done in 30 minutes. Where am I coming from? I'm coming from the All In Summit in Los Angeles, California. All In podcast. For those of us that don't know, for very successful tech-focused individuals. Chamath is a headliner. David Sachs, who's now the AI czar for Trump, is also on the podcast. Two other folks as well. Four guys got together, created this tech podcast back in 2020, 2021, and it's just grown exponentially ever since then. Now they do a summit every year where they invite some of the most influential and really important voices in the technology world to speak for over 2 days. Uh, this year, great lineup. Elon Musk was a speaker. Alex Karp, CEO of Palantir, was a speaker. Eric Schmidt, the former founder of Google, was a speaker. Vlad Tenev, the CEO of Robinhood, was a speaker. Chris Wright, the Secretary of Energy, was a speaker. So it was, I mean, the lineup was absolutely stacked, and the insights were fabulous. The energy was amazing at the conference. I'd say I walked away with five big takeaways. Um, One, physical AI. Everybody was talking about physical AI, robotics, self-driving cars. Dara, the CEO of Uber, was there, all about self-driving cars. Autonomous drones were a big thing. AI glasses were talked about. The Google DeepMind CEO was there as well. So really just a lot of physical AI emphasis. Really kind of corroborated our thesis in this podcast that
Right.
physical AI, the era of physical AI, has arrived, and it's going to get very, very, very big. Number two, the inferencing shift. We've talked about the shift in the AI training landscape or the AI model making landscape from training to inferencing. That was mentioned a lot throughout the conference. Eric Schmidt, former founder of Google, talked about it, but I think the best speaker on that was the ARM CEO, the chip designer, Renee Haas. He basically said, which I found very, very interesting, he believes the market for these inferencing chips, the market for edge AI chips, is ultimately going to be larger than the market for AI data center chips. So that's huge. And if true, that means the AI chip boom that we are seeing right now is not going to slow down. It's only going to get bigger and better and broader. And the AI chip stocks benefiting from that boom will continue to see a lot of success. So that was a big takeaway that I got from the conference. Another one was tokenization. Now, we haven't talked a lot about tokenization in this podcast. And I do want to earmark some time next week to talk about it. But I thought perhaps the most interesting interview of the conference was Vlad Tenev from Robinhood, CEO of Robinhood. I think they're doing some really interesting, spectacular things right now. The most interesting of which is the tokenization of equities. Now, that means tokenizing public equities and tokenizing private equities. I'm not all that excited about tokenizing public equities. I think that there is potential in that, but it's not as exciting as tokenizing private equities, where Robinhood would go out and buy hypothetical numbers here, buy a $500 million stake in OpenAI, put that, in there on their balance sheet. Then they would go and tokenize it. They would create stable coins on a one-to-one basis that are backed by that $500 million OpenAI stake, and then issue those tokens to retail clients like you and me on their platform, thereby allowing us a indirect way to get liquid access to investing in OpenAI. Now, Vlad, when he was on stage, one of the most interesting comments I thought was he was like, the reason we want to do this is because in this world of AI, where there's so much venture capital money out there, there's so much private equity liquidity out there, you are seeing companies like OpenAI fetch these multi-hundred-billion-dollar valuations with zero retail ownership. You are seeing companies go from zero to $400 billion valuations, and not a single average Joe got to partake in that wealth creation, right? It's all VCs and private equity and the big funds. Folks like you and me don't get to participate in that. So I think with that narrative, he can win a lot of legislative support from DC. David Sachs was on the panel when they were talking on stage and seemed very interested in this idea. But I also think it just wins a lot of consumer support and positive consumer sentiment for tokenization of equity. So you had physical AI, you had the inferencing shift, you had the tokenization of equities. To me, that was the big three. Then there were two others that I was kind of really intrigued by it, and to a lesser extent. One is nuclear. So, Energy Secretary Chris Wright was one of the speakers. That panel talked a lot about nuclear energy, and it talked a lot about specifically SMRs and the role that SMRs, small modular reactors, can play in powering AI data centers of the future. So I walked away from that conversation and the whole conference really bullish on nuclear's role in empowering the AI data center boom. But also, Chris Wright was very uh, emphatic on this idea that natural gas is going to continue to play a very large role as well. That it does take a while to build nuclear. The long-term future for nuclear is very bright, but the short to medium term, we need a transition energy. We talked about that last week. Nat gas is what I said that transition energy would be. Chris Wright, it seems that he agrees that nat gas is going to be that transition energy that gets us from where we are today to this, super nuclear future. And then number five was drones. Um, it kind of meshes with the physical AI thing, but it gets more into like space and warfare. That I didn't even know that Eric Schmidt, the former founder of Google, is now at Relativity Space. He's the CEO of Relativity Space, which is a space company. And he talked about, he thinks space is the next big economy. That's the next big value unlock. Elon Musk on Monday, Starlink bought spectrum from EchoStar, which is going to allow Starlink to beam connectivity directly to a cell phone, kind of like what AST Space Mobile is doing. And then, so we got to pick his brain, not we, the panel got to pick his brain on Tuesday about that. And he pitched this vision of Starlink becoming this one global carrier. So, not displacing T-Mobile and Verizon, but being a very strong complement to T-Mobile, Verizon, and all those companies out there. So space was something that, a lot of space stocks have been doing really well. We've talked about Rocket Lab. We've talked about AST Space Mobile. Planet Labs had a really strong earnings report this week. That stock went up about 50% in a day. So the space economy is definitely coming into its own. It's having a moment. And I think that the commentary at this conference, at this All In Summit, reflected that. So those are my five big takeaways from the summit. Again, walked away just generally feeling very bullish about the state of technology right now. Definitely some concerns because nobody else was concerned, right? Like that was the one red flag that I had walking away was nobody talked about a bubble. Nobody talked about, potential overvaluation in markets or overfroth or too much greed. Nobody talked about that. So the fact that nobody talked about that does worry me a little. Um, but I do think that the fundamental developments do warrant a lot of bullishness right now. So yeah, the All In Summit was great, and I came away from it feeling as bullish as ever on at least the next 12 months for tech stocks and specifically, AI stocks, tokenization stocks, stablecoin plays, and stuff in that wheelhouse, space stocks as well.
Gotcha. Yeah, that's a lot to chew on there. Look, decent amount, decent amount to take in. A lot of points there. It is reassuring to have some of the things we talk about on this podcast kind of be reaffirmed by the All In Summit. Essentially the AI theses you have regarding investments. It is pretty interesting hearing Robinhood just kind of even expanding the decentralization of investing to include pre-IPO or private equities. I think that's pretty fascinating. It could be a big boon
Yeah.
to the regular person, especially with the climate that we're in right now.
Yeah, I think that's going to be, to me, that was the most. I knew I was going to hear about inferencing. I knew I was going to hear about physical AI. I knew I was going to hear about Optimus and robots. And I didn't know I was going to hear about space. So that was actually a pretty cool thing. But the one thing that really shocked me was the tokenization of private equity. That
Yeah.
I was excited to hear from Vlad. I was expecting him to talk about it, but I did not expect the conversation to be that interesting. It was riveting. And the real tell for me was David Sachs, again, the AI czar for the White House. He seemed very engaged in that particular panel. He
Hmm.
was asking questions, he was leaning in when Vlad was talking. There was a palpable interest coming off of David Sachs towards what Vlad was saying about tokenizing equities, specifically private equities. I think it'd be great. I think it would level the playing field for a lot of retail investors. Now, it obviously comes with risks, right? I mean, one of the reasons that the capital markets were structured that way to restrict access to early stage investments is because they're riskier. 95% of them go to zero, right? 5% of them do go on to become OpenAI or NVIDIA or whatever it may be, but 95% of stuff in that world goes to zero. Um, so it's a tough investment proposition. It's tough to be good at, but just because it's tough to be good at doesn't mean we should restrict people from doing it. We should allow people to try and take on that challenge. And so I think that's a really cool development. Robinhood is pioneering it at the tip of the spear. That stock has been soaring, got the S&P 500 inclusion. They had their product day or some product day on Tuesday that was fantastic as well. Introduced a social media feed into their platform. Now they're going to allow people to short stuff. So, like, they're making big moves over there. They're making really big moves at Robinhood. Uh, we own that stock in our model portfolios for subscribers. Um, I think it's a real big winner. I think that it's come a long ways in a short amount of time, but I still think there's a lot of runway left considering they're just they're expanding the total addressable market rapidly. And they are a first mover in a lot of these very big addressable markets. So there's really just a lot to like about Robinhood as it relates to this tokenization story.
Gotcha. Yeah, it is really fun to watch because I think for a lot of people, Robinhood was the platform you can go get Dogecoin on, right? During the heat of the pandemic, but allowing this, a new wave of ownership class is pretty fascinating, and I think the risk to reward makes sense for a lot of people with the ubiquity of sports betting. People are already losing money on their phones with sports betting. Why not take a chance at owning a bit of a company versus losing because your favorite team lost, right?
Yeah, sports betting. That came up a little bit, putting sports betting on the blockchain and making it more dynamic in real time and ubiquitous. That was another conversation piece in a couple of those panels. Interesting to me, but again, I was trying to focus after or at least focus on the topics that had just these massive addressable markets with huge potential to change the way society operates. And so that was the kind of five points that I laid out for you.
Perfect. Now, on the topic of the way society operates, I do want to bring up the jobs report that just came out recently, and it was horrendous to say the least. There was a downward revision of nearly a million jobs over the past year, downward revisions for several periods of time. The only positive was a slight increase in year to year job raises for a very small sector of the market. Now, I do want to get your take on this, Luke. Juxtaposing this jobs report with the All-In Summit, and then just the nature of AI as we see it right now in the market.
Yeah, I would say so. As it relates to those jobs numbers, I mean, first we got that bad August jobs report, and then we got the negative revisions the following week. Um, so you got two kind of a 1-2 punch with bad labor data there. And we've talked about it. We think it's AI driven. We think that there's companies just investing in AI and hiring less and firing more, and AI is automating a lot of entry level work and management work and stuff like that. So that's where we think that weakness is coming from. My fear is that, traditional wisdom says you cut rates and you help the labor market. You cut rates, you unlock more capital, businesses invest more, and that leads to more hiring and more job growth. So that's why the Fed cuts rates to boost the labor market, to help a struggling labor market. My fear is that traditional wisdom gets turned on its head in this cycle, because if you lower interest rates and you unlock more capital and businesses now have more cash on their balance sheet, yes, they are going to invest it to grow, but the overwhelming majority of that new cash is going to go towards AI investments. It's going to go towards companies buying more AI software, deploying more AI software, maybe hiring a few more AI engineers, but then those people are tasked with figuring out how do we more effectively use AI throughout the business to save costs elsewhere. So if that is what happens, if the overwhelming majority of cash unlocked by rate cuts goes towards investing in AI and deploying more AI, then the AI driven job weakness that we've seen over the last 12 months, and really even further back, because that negative job revision you're talking about, that minus 911,000, that was from March 24 to March 25. Doesn't even include the last, 4 or 5 months. So the job weakening, labor market weakening started, at least according to data, probably March of 24. So that's a year and a half now, right? So the
Right.
AI driven job weakness that we've seen in the last 18 months could accelerate, could worsen if we get a bunch of rate cuts over the next 12 months. That's my fear. And I don't really know how things play out. But if we do end up in a situation where we've cut rates 4 or 5 times in the next 12 months and the labor situation has not meaningfully improved, uh, that's going to create some big question marks for the Fed. And it could show up in maybe some weak price action in the stock market, absolutely, given how elevated valuations are. But that's my fear. Now, as it relates to the All-In Summit and what people are saying over there was a universal concern about AI taking jobs. Absolutely. Dara was very concerned about it, CEO of Uber. Eric Schmidt was very concerned about it, former founder of Google. There was definitely worry, but it was kick the can down the road
Mm.
worry, if that makes sense. Everybody's kind of universal opinion was in the next 3 to 5 years, humans and AI will work together. And then in the next 5 to 10 years, AI will start to really take jobs. Now, I get that, and I see that thesis. I think that's probably right. But if everyone's subscribing to that thesis, and everyone's investing a lot in AI, then there is potential for these things to happen more quickly. And so AI working alongside humans maybe is the next 1 to 2 years, and then in the next 3 to 5 years, you kind of get more widespread job loss. Either way, widespread job loss is coming, whether it's 3 years, 5 years, or 10 years. It is coming, and it's a reality we're going to have to grapple with. And I'm not sure how society does grapple with that. One of the things that was a big topic at the All In Summit was this, they call it the suicide of the West, that there's large parts of Western culture that are trying to suicide themselves. And by that, they mean, that the biggest statistic there is just declining birth rates, that birth rates in a lot of Western countries are below what you would call the carrying capacity to sustain the society. So replacement rate, right? If every couple, two people need to have two kids, 2 to 2, right? 1 to 1. The birth rates are less than one, right? So we are not getting that 1 to 1. More people are dying than being born. Um, why is that? Like that was a big question in the conference. Why is that? Why do people not want to have kids? Why is there no Why is there a weakening desire to live? Maybe Alex Karp, CEO of Palantir, this was his whole speech. I would suggest everybody watching this go to X or go to All In, the All In podcast, and listen to Alex Karp's speech from CEO Palantir about this topic. You may agree with it, you may not agree with it, but it's riveting and it's a very passionate sort of portrayal of the urgency and the direness of the situation that is before us in Western societies. His big thing is we got to fight to defend, the West from suiciding itself. That's his big shtick. But whether or not you think we should fight or not fight, or the reality is we do have a situation where there are a lot of people that are disillusioned with the way the world works in the West, in Germany and France and the UK and the US and Canada. That is causing some unrest. Will that unrest turn into revolt? Will that unrest turn into depression because of AI job loss? Big questions. I don't have the answers, but big questions that I think more people need to be asking right now.
Right. Yeah. I mean, I have to play devil's advocate regarding this particular topic because I want to bring up a couple of examples. We have two countries in the East, Indonesia and Nepal, who are going through pretty violent protests. I think in Nepal they actually burned down the mirror of the White House, essentially, and that was because of policies by their particular governments, and people are getting poorer and poorer. So, will that happen in the states? Who knows? But it's happening right now in different countries. So, if the outlook is as bleak as it is at the moment, probably, right? I mean, if you don't have a job, if you don't have a future, yeah, you won't have kids, but like also what else are you going to do? You got to do something, right?
Yeah, they're just. I think the answer. I mean, if you want a solution, the solution is you have to make sure that the wealth created by this artificial intelligence boom is properly distributed. That it can't be a massive labor class robbery and capital class growth machine. It can't be that. You can't have an anti Robin Hood growth mechanism coming out of the AI boom. You have to have a Robin Hood growth mechanism coming out of the AI boom. You have to allow the labor class to participate somehow. You have to create more wealth creation opportunities for the masses. It can't just be the top 1% are making billions and billions and billions. Like Oracle stock, right? Oracle stock jumped 40% in a single day this week, and Larry Ellison made $125 billion. Like, great for him. That's awesome. I love that. That's great for capitalism. Huge win for capitalism. But we need to find ways for these wealth creation opportunities again to be more widespread. Not everybody gets to make $125 billion in a day. Obviously, that's never going to happen. But while that happens, simultaneous to that, you can't have a lot of people that can't afford homes and can't afford rents and can't afford this and can't afford that. That dichotomy, where on one side somebody makes $125 billion in a day and 95%, not 95%, but a bunch of people out there cannot afford or are living paycheck to paycheck. 67% of Americans, I think it is, right? 2/3 of Americans live paycheck to paycheck. That cannot persist forever. So there need to be more mechanisms out there to allow for, again, a more equitable distribution of the wealth creation of artificial intelligence. Right now, those mechanisms are not in place, so that there's gonna have to be some change there. That happens absolutely, but we're not at a we're far from a breaking point on that. This is not 12 months out. Even if no mechanisms do get implemented, it's still 3 to 5 years out for some kind of breaking point there. And in the meantime, the only reason we would get to that type of breaking point is because we have so much wealth creation in the capital class. It's like it's the jealousy thing, right? Like if the capital class is not making money, nor is the labor class doesn't get pissed. But if the labor class isn't making money and the capital class is making money hand over fist, that's when the labor class gets pissed. It's a jealousy thing, right? It's you compare yourself to your neighbor all the time. So if we do get to a breaking point, it will happen because of so much wealth creation in the capital class, which again, to me is the solution for people here is you got to just join the capital class for now. For as long as this AI boom is happening, all in with artificial intelligence, you have to embrace that motto. because that's where the wealth creation is going to happen. And if we do get this negative outcome, I don't think it's going to happen, but it's definitely a possible outcome. If we do get that negative outcome, it's because there's so much wealth creation happening in the capital class. So you might as well be a part of that wealth creation event.
Yeah, yeah, I hear you. Yeah, you gotta definitely go all in. But I mean, I want to counter. It's hard to call it jealousy when you can barely afford to pay rent, and Elon Musk has the potential for a damn near $1 trillion pay package. That doesn't equate to jealousy, but yes, I do agree that you if you can't beat them, you got to join them.
Yeah, jealousy, resentment. I mean, there's a lot of feelings you could characterize it as. It's mostly just um a wealth divide. And the wealth divide, if it gets bigger, it's a rubber band, right? If a rubber band is stretched 40% of how much it can be stretched, it doesn't snap back, right? Like you can hold it at 40% of its stretching capacity forever, but you can't hold it at 100%. And so if the rubber band gets stretched to the point of just extreme wealth divide, and we're not there yet, but AI could get us there. If that happens, then it snaps. And that's the breaking point. Like I said, regardless of which way you slice it, how you look at it, you think it goes on forever, you think it doesn't go on forever, you think there's going to be a breaking point, you don't think there's going to be a breaking point. Republican, Democrat, doesn't matter. I mean, the solution right before you, right now, for the next 12 months at least, if not longer, it's the same. It's invest in AI stocks. It's invest in where the wealth creation is happening right now. And everything tells me that that wealth creation will continue for, again, at least the next 12 months. Look at Oracle's results. I mean, I know we're going to talk about some of the earnings reports, but Oracle's results were absolutely fantastic. That stock does not go up 40%. That it doesn't do that. But it went up 40% in a day this week. It went up 40% in a day this week. Its best day since 1999. There is a ton of wealth creation happening in the capital class, specifically in AI stocks, and you'd be absolutely foolish not to be participating in that right now.
Definitely. Yeah, you kind of covered Oracle right there. I want to talk about another one that absolutely skyrocketed. Nebius went up a crazy amount recently due to a Microsoft deal. If you could cover that earnings report also.
Yeah. So Nebius, same bucket as CoreWeave, same bucket as Oracle. The story here is that these AI hyperscalers, Microsoft, Amazon, Google, Meta, they are spending what, $400 billion together or something like that on building new AI
Mhm.
infrastructure, on building new data centers, new AI compute, right? Okay. Now you would think that if they're spending that much money, they have all the compute supply they need to service their demand, but they don't. Demand for AI compute is still outstripping supply of AI compute, even though these companies are spending 400+ billion every year on building new supply. Even that amount of spending is still not keeping up with the insatiable demand for AI compute. So, what they're having to do is turn to other players in the space to rent compute. They're having to go get more compute. They can't build it fast enough, so they have to go and rent more compute from Oracle. They have to rent more compute from Nebius. They have to rent more compute from CoreWeave. So obviously, that's a great thing for those players, Nebius, CoreWeave, Oracle. Those stocks are soaring, as you can see in the charts. But it's also just great news for the entire AI infrastructure layer because what the hyperscalers are doing is they're renting that because they can't build enough supply themselves, which means they're going to keep building more supply. They're going to continue to pour hundreds of billions of dollars into building new data centers, buying new cooling equipment from Veritiv, buying new networking stuff from Cisco and Arista, buying new lasers and opticals from Coherent and Credo. Like these are stocks that have been on fire, which based on what Oracle said, based on the Nebius Microsoft deal, they're going to stay on fire because this AI infrastructure boom is not showing any signs of fatigue whatsoever. So the Oracle report, the Nebius deal, those things to me are massive, massive wins for the entire AI compute layer. And you get those stocks that have been red hot, whether it's Lumentum, Coherent, Credo Technologies, CoreWeave, Nebius, Resta Networks, Astera Labs. These are stocks that have been red hot. They're going to stay red hot, at least for the next few months. Like they are going to stay red hot because there is no fatigue in the AI infrastructure spending appetite from the big hyperscalers.
Gotcha. I'm gonna rapid fire through four more stocks real quick while we got you, Luke. Next up with Planet Labs.
Planet Labs, I talked about it a little bit at the top. The space economy is just really having a moment, and Planet Labs is becoming a space AI play. They're not just integrating AI into their services, but they're also the data they're producing from all of their satellites is proving valuable to training AI models. Companies are becoming customers. Their revenues are soaring, their backlog is soaring, margins are soaring, and the stock is soaring. So I think it's the most underrated of. I have my three kind of big space stocks: Planet Labs, Rocket Lab, and AST Space Mobile. I would say PL is the most underrated in that group. Now it's finally having its moment. But as you've seen with Rocket Lab and as you've seen with AST Space Mobile, when these stocks have a moment, the moment's quite big and quite long. So I think
Mm,
Planet Labs is just in the beginning innings of having its moment. So this to me is one of my favorite space stocks out there.
awesome. Okay, next up, Broadcom.
Broadcom, great report. Again, just more signs of the AI infrastructure spending boom not slowing down at all. Now, the nuance there is the custom chip thing, right? Like they are basically the custom chip makers, and so all of the hyperscalers are essentially now working with Broadcom to make custom AI chips, and they just got a big fourth order from a mysterious customer for $10 billion for custom chips, custom AI chips. My work suggests that mystery customer is Apple, which would imply they're working with Apple, Meta, Amazon, and Google to make custom chips. So they're working with everybody. I think this is a risk to NVIDIA, a little bit of a risk to NVIDIA, because I think this is the beginning of a shift from NVIDIA GPUs to custom XPUs. And that is obviously a shift that Broadcom wins in. But if Broadcom wins, there has to be some market share loss. And I think that market share loss comes out of NVIDIA. That
Mhm.
being said, the whole pie is going to keep growing. So the story in NVIDIA becomes total pie growth versus market share erosion. Which one's going to win that tug of war? I think total pie growth. So I think NVIDIA is fine. But if you're going to invest in this space and you put a gun to my head, so you got to choose one, I want to go with the one that is benefiting from total pie growth and market share expansion. That's Broadcom. So I really like what Broadcom's doing.
Awesome. All right, that's that Waymo talking. Two more real quick. Guidewire software.
Guidewire software, insurance software, a lot of AI stuff going on there. See, what I like applied AI in heavily regulated and specialized industries, because that's stuff that foundational LLMs can't tap into. ChatGPT is not going to be underwriting insurance. Okay, it's not going to be helping insurance stuff. Guidewire is that though. They're plugged into the industry. They know the regulations. They know the rules. They know all that stuff. They're within the framework, and they are now using AI to optimize the process. Strong earnings, great growth, stock has been on fire. This is one of my top AI appliers.
Amazing. Yeah, it looks like their ARR damn near tripled.
That stock. I mean, they're crushing it, man. They are. I mean, look at the chart. For everyone, all the listeners, pull up the chart. I mean, that stock is absolutely crushing it. Price is truth. My Waymo is talking to me. I just got dropped off, but I'll go for a little walk. We can continue this conversation till we finish it up.
For
And by
sure.
the way,
Yeah, last
I'll be walking around in 100-degree heat. So I'm doing this. I'm doing this for the podcast. I'm doing this for the subscribers. We're not going to cut it
we,
short just because my ride's over. Let me get my bags out of my car. All right, what's next? We got Guidewire. What's after them?
we got Samsara.
Samsara IoT, fantastic company, leading the revolution in digitizing physical industries. And by physical industries, I mean like construction, uh, construction engineering, HVAC, things like that. They're leading the charge there. And I think they're just a really good company. Now with AI, obviously they can apply a bunch of AI to optimizing the management of let's say the Samsara CEO was on CNBC last week, and he gave a great example of, okay, because of tariffs, because of this uncertainty, because of uh, a lot of our customers don't really know how much money they should budget for what, they're trying to make the most of what they have. So if you have like an asset, like let's say a big drill or whatever, you want it to last as long as possible now. And so you are going to tap Samsara, who's going to put a little sensor on it and use AI to help you optimize the shelf life or the utility life, the usage life
Wow.
of that drill. So it's weirdly enough a company that I think a lot of people thought was going to be negatively impacted by tariffs and trade uncertainty and all that stuff because it was going to pause a lot of business decisions and hiring decisions and spending decisions. But actually, what it's done is created urgency among companies to have more efficiency in their operations, and they're tapping Samsara to do that. So I think the company's in a great position. I think the stock is really undervalued. I really like that one for the next yeah, I'd say definitely next 12 months, maybe even longer.
Yeah, wow, that's an excellent paradigm shift for Samsara. Okay, okay, appreciate you sacrificing yourself in that Phoenix heat. Now,
I am.
that's it for the companies for their earnings reports. But I did just want to ask: is there anything you think we might be missing this week that you might want to talk about before you get back in the house?
Oh, let's see, man. Considering it's 100 degrees out, I can't really think of much right now. No, but seriously, I just think that there's a lot going on right now. All the fundamental things that are happening are telling us to be bullish. You have to be bullish. You have to be very excited about a lot of these really cool developments happening in and around the AI space, in and around tokenization and stable coins, in and around space and drones, in and around satellite connectivity and Starlink buying spectrum and all that crap. Like, there is so much to be excited about. But the one thing to be worried about are these consistent signs of just too much greed in the market.
Hmm.
I think the best example is these crypto treasuries. I don't know. Have you followed the crypto treasury thing?
I have not.
So, MicroStrategy, or now they're called Strategy, right? Michael Saylor's company. Their big thing was, all right, let's go and raise a bunch of money and then take all that money and buy a bunch of Bitcoin and put it on the balance sheet. And then we just become a company that is valued off of, the value of Bitcoin, all the Bitcoin we own. Okay. So that was their crypto treasury. They created a Bitcoin treasury within the company, and the stock became a proxy for Bitcoin. Bitminer, BMNR, we've talked about this
Yeah.
stock. They, they did this for Ethereum, or they're doing this for Ethereum. Now there are a bunch of, my son's running out to say hi to me, so I'm gonna finish this up real quick. There are a bunch of really cool other companies. Actually, they're not cool companies. They're a bunch of weird companies, to be honest, that are completely useless companies that are creating these altcoin treasuries to go and buy Chainlink or go and buy these random
Mm,
cryptos, which, like, okay, great concept. But when all of these companies are doing it this week, there's been like one a day. Like CWD was a ticker of one. ASST was a ticker of another. QMMM, I think, was a ticker of another. These random useless companies are issuing these crypto treasuries. They're starting these crypto treasuries, and their stocks are going up 3,000, 4,000, 5,000% in a day. And it's like, okay, that's a cool concept, but it's been warped with too much greed, far too much greed. And it reminds me of back in 2017, late 2017, there were a bunch of companies, Hive, Riot, Kodak, the camera company, that
right.
rebranded as blockchain. right? Like Hive became a blockchain company in late 2017. Riot became a blockchain company in late 2017. Kodak, the camera company, became a blockchain company in late 2017. I think it was Long Island Iced Tea became Long Blockchain in late 2017. Months after all of these transitions, the entire crypto market peaked out. Bitcoin ran up to $20,000 and then it crashed 80% over the next 18 months. So it's like history doesn't repeat, but it rhymes. And we have to see the warning signs in the greed in the market. And this is, obviously that was a crypto story, but this applies everywhere. Oracle jumping 40% in a day. All the headlines, best day since 1999, best day since 1999. And that sounds awesome. But what happened after 1999?
Right.
What happened after 1999? Can we answer that? What happened after 1999 was an 80% crash in the Nasdaq from March of 2000 or April of 2000 to late 2002. So everything is telling me fundamentally to be super constructive and super bullish and super excited about all of the wonderful things happening in AI. And I am so excited. But I'm not going to ignore the fact that there is just too much greed out there right now. And eventually, that too much greed will lead us off a cliff. And there will be a massive short term correction. We will bounce back from it. Everything will be fine on the other side. But it could be a very painful short term drawdown. I'm not going to ignore those signs. They are everywhere. Watch the shot clock. Don't run for the hills, but watch the shot clock. And that, my friend, is my final word before I go say hello to my 2-year-old son who hasn't seen me in 3 days. And to him, it probably feels like 2 months. So,
All right, much appreciated, Luke. That's a lot to take in, but AI with AI for now. That's
AI
been
with AI.
it's been another week of being exponential with Luke Lango. I hope to see you in the next one.